When you start a new business, there's a lot of exciting things to do, like set up your bookkeeping and accounting. No? Is it just me? Okay, maybe not. Your accounting and your bookkeeping are probably not as important as figuring out a way to build your business up and acquire new customers. However, it is still very important to the health of your business long term because, without accounting, how would you know your monthly cash flow or how to budget for your salary or when to hire employees, for example? So bookkeeping and accounting is very important. So what I want to do in this video is help new founders and people who are in the process of launching a new business learn why you need bookkeeping and accounting, go through a checklist of what you need to get set up, and answer some common questions along the way. So if all that sounds good to you, then all I ever ask is for you to hit the like button for the YouTube algorithm so other people like you can learn how to set up their business accounting and bookkeeping processes. Stay tuned. Hey there, and if you're new, welcome to our channel. I'm Sean with Life Accounting, the accounting company that helps you save on taxes and build more wealth. As always, what I'm gonna do is put the timestamps for this video down in the description below so that you can skip to the parts that you want to learn the most about. But listen, if you are a new first-time business owner, then you should definitely watch this entire video. All right, let's go ahead and dive in with number one, the purpose of accounting and bookkeeping. So very often people commingle accounting and bookkeeping because they both involve numbers, right? But look, they're actually very different. Let me explain. So accounting is the process of interpreting or analyzing financial information. Okay, this is helpful when you're trying to make strategic business decisions like, can you afford to hire an employee? Or are you spending too much on software and tools? And how much should you pay yourself as a small business owner? Or even looking at what are my estimated tax projections for the next year? So accounting is all about interpreting financial data. But in order for you to get that data, you must do bookkeeping, which is the process of tracking all your financial reports, like recording all your sales and recording all your expenses and recording your liabilities or assets that the business acquires. And of course, bookkeeping and accounting go hand in hand. You need bookkeeping in order to do accounting. You need accounting in order to make smart financial decisions. For example, if you are trying to get a business loan or solicit investors, then more than likely they are going to want to see a clear and easy to read financial statement, even if it's just a forecast, so that they can make an informed investment about your company. Also, you will want proper accounting and bookkeeping processes in place so that when you go to file your business taxes, they can be on time and accurate. Okay, now that you understand that, let's move to number two and talk about your business entity. Now, if you've already launched your business, then chances are you have selected your business entity like an LLC, but you should know that your entity type can determine how you are taxed, how you pay yourself, your business risks, and a lot more. For example, a single member LLC cannot issue themselves a W-2. On the other hand, an LLC that is taxed as an S corporation must pay themselves a W-2 as a reasonable salary. So when you're doing your bookkeeping and your accounting, you have to know that your business entity may impact your process. Now, we have a few videos on this channel where we talk about different business entities and outcomes. So I'll link to some of those videos down in the description below and at the end for you to watch. For now, let's go ahead and move on to number three and talk about the two accounting methods. All right, it's my goal not to turn this video into some type of super technical accounting lecture, but I do need to talk to you about two accounting methods because you will come across this if you decide to do your own bookkeeping or accounting. Which, by the way, if you want to see me make a video on how to completely do your accounting and bookkeeping step by step, just tell me down in the comment section below because this video is simply an overview. Anyway, so the two accounting methods are number one, cash basis accounting, and number two, accrual basis accounting. Let's talk about both of them. So the cash basis method is the simplest way to handle your accounting. It simply tracks income when it is actually received and subtracts cash when expenses are actually paid. And this is the way that most people think about tracking their income and expenses, right? Like they will want to track when the money comes into their bank account and then subtract it when it goes out. But this method does present a problem for businesses who are on a pay schedule with their customers and vendors, because cash flows do not necessarily reflect the proper timing for when income was received or made, which is why you have method number 2, the accrual basis method. So this method counts money when it is earned rather than when it is received. For example, if a customer pays you upfront for an annual service or subscription, even though the money has been received by you, it hasn't technically been earned. And so you wouldn't want to record it as revenue and pay taxes on it yet. Because, okay, something could happen with the product or with the service that prevents you from actually earning the rest of the revenue. I hope that makes sense, because these methods could definitely get confusing. But look, if you need help with accounting and taxes, then consider working with our team by clicking the first link down in the description below so that you can learn more about how we help you. All right, let's move on and go through a checklist of what you need to get set up. So the first thing you'll want to do is, number 1, try to go through this checklist at least every quarter. Although most accountants would try to set you up with monthly bookkeeping, and if your business is really rolling and you have a lot of transactions, then you may even want to move to weekly bookkeeping. But of course, for most startups and new businesses, that's a little bit extreme, and quarterly bookkeeping should suffice. Okay, the second thing on my checklist is, number 2, enter your transactions into a bookkeeping software or spreadsheet like Google Sheets. Now, most bookkeeping software like QuickBooks, affiliate link in the description below, will allow you to connect your bank account to the software. And so this will save you time from having to manually enter in all your transactions one by one. And I know this was something that I had to do for many years. However, even if you do decide to use this technology and automatically have your transactions entered, you still need to remember to enter transactions that don't occur in your bank account, like your cash transactions or when you are acquiring an asset or a loan. So once you have all your transactions in your software or in your spreadsheet, then you can move on to number 3 and categorize all your transactions. You'll need to label and categorize what transactions were expenses, which ones were revenue, and okay, what type of expense it was and where the revenue was from. Now, this becomes much easier with a software like QuickBooks, because once you categorize a specific vendor, you won't have to do it again because the system will remember it. The fourth thing to check off is number 4, keep receipts. So right after you log and categorize all your expenses, then you are practically done with the receipt. However, you still may need to keep it in case you run into an IRS audit. Now, IRS receipt requirements can get a little bit tricky, and some people think you need to keep every single receipt. But look, this is not the case. In fact, I have an entire video where I break down the IRS receipt requirements, which I'll link at the end of this video so you can watch it right after you finish this one. The fifth thing on my checklist is number 5, reconcile your bank accounts. Now this part is critical, because if you fail to reconcile your bank accounts, then you'll likely end up with some errors in your bookkeeping. Okay, reconciling is the process of making sure your beginning balances and your ending balances on your books match up with your banks. Now, I'm gonna be honest, depending on your business and your transaction types, this may get a little bit tricky, and you'll likely have to do some research on how to handle recs within your type of company or your industry. But you can also make sure you are subscribed to our channel, because we'll likely have more videos breaking down bank reconciliations in the near future. Okay, moving on to number 6, I have pay your vendors and other bills. Just go ahead and get it over with. If you have some invoices that you know you need to pay, or you have some business credit card bills, then this is your reminder to make the payment. Okay, have that on your checklist and make sure you check it off. The last thing you want to do is forget to make your payments, because that could affect your business credit score and harm the relationship you have with any of your critical vendors or partners. Okay, so those are some of the tasks you want to make sure you are handling monthly. Now, once your books are done, then you should be able to move on to number 4 and prepare and analyze your financial statements. Now, this is where accounting starts to become your best friend. So again, with most bookkeeping software like QuickBooks, once you have entered all your transactions and categorized them, then you should be easily able to create a financial statement. The big ones that most startups use is to analyze their profit and loss, or also known as an income statement. This statement basically summarizes all your revenues and all your expenses to determine your overall profitability. Now, there are two big financial metrics that you're going to fall in love with. Okay, the first one is called runway. So this is basically going to tell you how much cash you have on hand versus how much money you spend. For example, if you have $100,000 in the bank, but you are spending $10,000 each month, that means you have a 10-month runway before you need to make $1 in revenue. Knowing your runway will give you a clear understanding if your business is trending in the wrong or right direction, which gives you an opportunity to make some changes before it's too late. Okay, the second metric is called your net profit margin ratio. This number will tell you how much profit you earn for every dollar of revenue. For example, if you have $10,000 in revenue and you have overall cost of $8,000, then your net profit margin would be 20%. And once you know your net profit margin ratio, then you can start answering questions like, okay, is this a typical profit margin ratio in your industry? Is this aligned with your older financial projections? And what could be done to improve some of these profit margins, and so on. Now, before I start any business, I take a strong look at the industry profit margins, and if there is something unique that I could do to improve those margins, like introduce a system that I've built or a new technology that the industry may not be accustomed to. So runway and net profit margin are the big two, but analyzing your financials could help you identify other things like who are your biggest customers, or who are your most important vendors, and what are you spending the most money on? Is it worth it? And so on. And those are very important to know. Now, let's move on to number 5 and quickly answer the question, should you do your bookkeeping and accounting yourself or outsource it? Now look, I'm an accountant and my company offers accounting and bookkeeping services. And I'm gonna keep it real with you, okay? The decision to handle your own accounting and your bookkeeping and your taxes comes down to 3 things: time, money, and knowledge. And these are 3 things that only you would know. So when it comes to time, okay, are you willing to spend 4, 5, 6 hours to do your own bookkeeping? If so, then maybe you can learn how to do it yourself. On the other hand, if you are willing to pay someone $300, $400, or $500 a month to do the bookkeeping for you while you focus on your business, then maybe outsourcing is a better fit. And finally, you want to think about the knowledge. Okay, if you know you are horrible with numbers or you hate details, then you probably shouldn't go through the hassle of learning something that you'll likely hate. But if you have a technical side and you understand numbers and you like looking at money, then not only could you do it, hey, you may actually enjoy it. So there it is, how to handle your accounting and bookkeeping as a new business and startup. I hope it was helpful and you actually learned that this is not that difficult and it is very important to your company. Coming up next, I have 2 more videos that I mentioned I will link at the end, so make sure you check those out if you haven't already, and I'll see you over there. Peace.